He's been outspoken not only on inflation itself, but what the Fed should do about it. And, Professor, it's great to talk to you today. You had made the argument that inflation is coming down broadly and that it was going to lessen what the Fed had to do. You want to rethink that today?
I want to elaborate on what Steve has just talked about, and that is that we've actually had a lot more inflation over the last 18 months than recorded in the official statistics, and we're going to show a lot more inflation next 18 months, and there actually is going to happen. And the reason is specifically housing and the way the government puts housing into those statistics. For months, as Josh just said, we had 40% rise in housing prices. If you look at the CPI housing index, it was up like 7 and 8%. Because of the way they do the calculation. So it understated over the last 18 months. It's going to overstate. If you're on the ground today, you talk to real estate brokers, they say prices are not rising anymore in real estate. In fact, they are falling on a nationwide average basis. Will you see that in the CPI? No, you will not see that in the CPI for 18 months. What I'm saying is, that we're going to get that overstatement just like we got the understatement. Now, that's the risk of an over-tightening Fed. Now, yeah, the Fed will go 75, and they may go 50 and 50 again, like Goldman Sachs said. We may get over 4%. Let me also remind people, that, hey, that sounds attractive. The long-run return on stocks is over 6% after inflation. After inflation. This is a 4% before inflation.
Professor, you can't suggest 75. Oh, they may go 75 and they may go 50 and then another 50 and be bullish the stock market in the same time, can you?
Well, I mean, it's already built in. I mean, that's why you have a 4% drop today. It's already in the future. I think that they're actually anticipating that. My feeling is that if they see the slowdown, if they take a correct view on what future inflation is, they may not have to go that high. That's the relief the market is watching. Is inflation really proceeding, or is this just a lot of statistical distortion because of the way in 1981, they totally changed the way housing prices go into inflation? I mean, don't forget, housing prices 50% of the core rate, almost 50%. If they're not going up anymore, you knock the core rate in half of what we just saw. I'm just telling you the statistics versus actuality. Yes,
Professor. Maybe it's going to be stickier than you thought. Maybe they're going to keep their rates up longer at this level, if not higher, than you think. Doesn't that
would be the policy
dynamic
mistake
for what the stock market can do?
But
isn't that more likely than not at this point?
Well, listen, I think they're going to look at the economy, and I hope they understand what the statistics are versus what the on-the-ground inflation is. And although they have to stand firm now because, as Josh said, they really made a terrible mistake by staying low way too long, we're all expecting and hoping they're not going to stay tight too long. But the market is a bit nervous about that. But listen, when we say tight too long, they're going to look at the data. They're going to look at the data.